Guys, how are we all today? So a week ago I made this video, actually 8 days ago, I made this video talking about how Bitcoin looked like it was going to capitulate, but the weekly BX trender was showing the potential of a short-term reversal that could last approximately 3 to 5 weeks, 2 to 5 weeks-ish. And lo and behold, Jason's video from yesterday is pretty much exactly what's going on. We have liquidated nearly $500 million worth of short positions, and Bitcoin is making its way to $75,000, and I do believe this rally will probably continue towards $80,000. Now, I'm going to just do some quick analysis first before we look at other things. On the monthly BX trender, nothing has changed. It is still dark red for this month. We probably are going to need to see the high of the previous month taken out for the monthly BX trender to turn light red again. And in that case, if we do push above $80,000 and close above $80,000, we would likely see at least a 2 to 3 month reversal, and potentially even the start of a new bull cycle, as Peter DiCarlo likes to call it. It may not be an entire bull market, but we could see that all-time high get taken out, like we saw in 2021. The monthly BX trender flipped red before flipping back green again, and we made a new all-time high only just. Now, before anyone gets excited with me saying that, a wick above $80,000 is not going to cut it. So if we push to say 80,200, roughly where that monthly swing low is, or even come up to some of these fib levels at say 83, 84K, and then reject, and we close back above the open of last month's bar, I do believe the monthly BX trender is going to stay red, which history has shown suggests further downside. Now, again, if we look back on the entire history of Bitcoin, when we get this many dark red months in a row, I have backtested before, it is very likely that we will see a continued sell-off, or at least a extended consolidation. You don't usually see 6 months of red on the BX trender and then price just instantly reverses to a new all-time high. So even if we do close this month above 80K, I still believe we're going to range trade between 60 to 80, 85K, wherever this month closes, if it does close that high, for the next few months. Now, with that out of the way, on the weekly time frame, you can see last week closed light green again. So if you entered on the weekly BX trender signal at $66,000, you would be in nearly about 15% profit. Just some quick maths that probably failed very badly, considering I did not sleep well last night. But you can see this week is light green. Now, if we do get a sharp reversal next week, that is probably the max pain for the market, as everyone gets super excited for this week, thinking the bull market is back on, and then we get absolutely slapped back down, which is kind of what I was talking about in the pump and dump theory in my video last week. So if you are trading the weekly BX trender, congratulations. You've made an amazing profit on the way down here. I think that would have been, I tested this last time, but it was 76K to 66K. So you would have made 10K per Bitcoin on the way down, and now you'd be up about 9K per Bitcoin. So congratulations if you are trading that. Now, another quick mention, I said this last week as well, it is possible that we retest the weekly market bias from the underside, and depending on how many weeks it takes us to get there, if this rally continues another 2 weeks and this market bias trends down, it could meet us around potentially $85,000 for a rejection like last time. If we have a look at the previous cycle, that didn't even happen. Like, I was talking about how I thought we were potentially around this May period of 2022, And you can see we didn't actually manage to rally into the weekly market bias before capitulating. Now, another thing to note is this rally, geez, I'm going to have to zoom out so much, but bear with me. You can see this rally here in January 2026 didn't actually make it to the top of the market bias like it did in March of 2022. So one possible theory is our January rally was this February little rally here, where and we're still due for this rally into the top of the market bias. Now, if you've been watching, Jason and Michael and their time analysis and all that, you're probably thinking this theory is probably not true and we're more likely somewhere around here, May 2022. So, obviously, I don't know the future, and I'm going to say that if we do rally into the top of the market bias at $90,000, let's say, in the next 2 or 3 weeks, that would still be a weekly lower high and means that lower prices are still a possibility. I'm still eyeing off the high 40s, low 50k region as a bear market price target. Now, the other theory is that Jason lately has been talking about how in a more bullish case, we've already seen this FTX style capitulation, and we're somewhere in this period here, July of 2022, where price just range trades between, it was 17 and 25k back in the day. It could be 60 to 80 or 60 to 85k this time. And everyone, has been accumulating, thinks we're going to shoot to new all-time highs, and then we get this final capitulation. People panic sell right into the hands of smart money before we see the new cycle take off. So I'm definitely not ruling out that theory where we could potentially just see a bit of a range here. But as always, I'm going to stick to my strategy and let the market do its thing. On the daily time frame, you can see that I've drawn a little extension thing here where projecting from low to high, if we were to see a 100% repeat, which we almost saw perfectly from this February 28 dump, or it was perfect from this February 24 dump to this, March 4 top. If we were to see another 100% repeat, we could see about 77 to 78k on this rally. And if we were to get another 100% repeat of the decline, we would come down to around 44k. Now, an interesting thing to note is this little extension here is almost a perfect repeat of this collapse here. Now, they're not perfect, of course, because, markets aren't perfect. But with that being said, if we bottom at, say, 49, 50, 51k, I'd still be pretty happy with a short trade. Now, obviously, trading the daily 50 TMA strategy, like I talked about in the video I pushed out last week, we got that daily close. I went long at about $70,000. You had this lovely little fake out bar. There was potential to take partial profits on this, abnormal move. If you remember what Michael and Jason says, when you get a really long swing and multiple days up and then you see a really big move, it typically marks a local top. In this case, we only saw 1 day down, just taking out that previous low before we reversed the swing and went back up. So if you did nothing like the 50 TMA strategy should have told you to, without trying to tweak it with any GAN swing methods, you would still be long from 70,500 and you'd still be in some pretty juicy profit. Over on the 4-hour time frame and 1 hour and 15 minute, there really isn't much to talk about other than the fact that I was talking about how the lows were getting higher and we were seeing more volume on the buying than the selling. I think I talked about this on last week's video. maybe I only talked about it in Discord, but whatever. So that was a classic Wyckoff accumulation schematic, and you can clearly see we have seen some higher prices. So if you are buying into any of these higher lows at 65, 68, 69k, you'd also be in some pretty nice profits. Now, a quick look at the USDT dominance. You can see it looks like we've put in a short-term top with that weekly lower high, and you can see the momentum indicators, the stochastic RSI and the weekly BX trender, are also showing some selling pressure. Now, if we take a quick scroll back to last cycle, too far back, geez, it's a weekly time frame, not a daily time frame. Why am I scrolling that far back? You can see in this period here, June 2022 and November 2022, we both got those lower highs on the USDT dominance. And once you started to really see that, it was pretty much the top was in for USDT dominance. But as we know, altcoins went much lower and Bitcoin only went a bit lower. So I guess it's a bit of a rotation of money in that case, which aligns with Jason's theory that we are in the formation of a low, but lower prices cannot be discounted just yet. And if we are to take this little fractal here, you can see the 13th of June to the 8th of August was just under 2 months for a rally. And if we are to take this high here, the 2nd of February, if we take just under 2 months, into the last week of March, that would suggest that this rally has maybe 1 or 2 more weeks to go, which lines up with my analysis really well. So I really like it when multiple layers of analysis come together. Quick look at the USDT dominance. We have rejected off the 50% level yet again. I'm not really going to cover this anymore, as I think Jason and Michael do a really, really good job of covering the US dollar index. Did I just say USDT dominance? But let's have a quick look at market data. Now, if we have a look at the liquidation heat map, you can see, I don't use that. I was meant to use the liquidation map, my bad. But you can see the long-short ratio is well and truly out of whack, coupled with the excessive short liquidations. If you remember me saying last time, when we start to see that 500 million mark of short liquidations, because more people go long than short, it can mark tops in the market. Even if it only holds up for a few days, it is still a local top. Now, if we have a look at the liquidation map, you can clearly see we have gotten heaps and heaps of longs trapped right now. And for the first time in a long while, the long liquidation side looks bigger than the short liquidation side. Now, I don't cover this chart on YouTube very much, usually Discord, because I just don't know why. But you can clearly see, if we do get a push up to about 79, 80k, that would be another 500 million of short liquidations. And typically, once we start to hit that $1 billion of short liquidations, that's when you start to see major tops in the market that hold up for weeks or even months, rather than just days, which that 500 million liquidation signal can usually mean. So again, that $80,000 region does look like a potential magnet for the market right now. And I think I just said 79k instead of 76.9, but you get the gist. If we have a look at the Bitcoin exchange liquidation heat map, same story on the 30-day time frame. To get that $1 billion of long liquidations, we've only got to pull back to around 72, 73k. Now, obviously, a lot of people are going to have stop losses and everything, or they're going to manually close out their trades. I've found, using this for the last year or two, I find you typically need to go a bit further than where the liquidation map suggests So I think if we have a swing to potentially, even if we see like a 5% sell off to, about 70K, we'll probably see that $1.2 billion of liquidations. And that could potentially mark a turning point for a couple of days in the market that would spur on that final push towards $85,000 and mark that major lower high, which I am expecting. Now, on the hyperliquid chart, you can see something very, very different to the Binance and other centralized exchange charts like OKX, Bybit, etc. Hyperliquid looks like a lot of people are still short. Now, I don't actually know exactly how to read the hyperliquid chart versus the normal centralized exchange chart. So if anyone has any fundamental analysis that they want to share here, feel free to go right ahead and drop a comment below. But I just find this really interesting that on centralized exchanges, a lot of people are long, but on hyperliquid, a lot of people are short. Now, does this mean that more retail is short because retail is using centralized exchanges while smart money is using decentralized exchanges? So does smart money know that retail is now trapped in longs and a dump is incoming? Just a little theory there. I don't have any actual triggers to go short yet, but that is something to keep in the back of your mind. Now, another thing to note is we have finally come out of extreme fear. Now, if you've been tracking Jason's videos on YouTube, he talks about time analysis and how many days we usually spend in extreme fear before price begins to make a low. I'm not going to hijack any of his analysis. You can go have a watch of his video yourself. But the FOMO finder is still in uncertainty on this rally. So it is potential that we can shift back into the balance state and squeeze a few more shorts before rolling over again. Similar to what Peter DiCarlo has been talking about over on X. He's the guy behind Traders Helping Traders. You can clearly see he's been talking about a potential bounce up to $80,000. And you can see exactly what I was saying. Whilst the monthly BX trender is still red, all the rallies typically get sold off. And what more is there to say? That's pretty much it for today. I don't really have much else to say right now, other than the fact that I am personally hedged. I've got a overarching short position as I'm expecting lower prices, but I have some smaller long positions to take advantage of the bounces to the upside. Because, why would I want to just sit in a short this entire time and ignore all these $15,000, $20,000 moves per Bitcoin to the long side? Anyways, thank you all for watching. Please like, comment, and subscribe, and I'll see you guys next time.